We'll be starting off with Jeremy Asher from Tower Resources. He's the chairman there. They're a small cap oil explorer, got some interesting assets off Namibia, South Africa and Cameroon. An interesting moment in that company's history, so we'll hear more about that. Let's kick off with Jeremy Asher from Tower Resources. Jeremy.
Thank you, Ed. And I should first of all say, some of you have heard me present about Tower before, and some of you probably have not. So I'd like to reassure both groups, firstly, that I am going to go through a corporate presentation and introduce you to the company and our assets and who we are. At the same time, I'm not going to go through all the same slides that I've been through in the past, and I plan to dwell a little bit more on a couple of the slides to discuss the latest timing on the well that we're planning to drill and the process leading up to that, and also to be able to just talk more generally about the financing of it and answer questions as you may have them. So I hope that there'll be something for both old and new friends. In terms of Tower and who we are, we're an AIM-listed oil and gas company, and our history was really as an exploration company, but although we have exploration assets still, mainly as a result of those old days, our real focus at the moment is an appraisal and development project in Cameroon. It's not a huge project. We have, on our block, we have 18 million barrels of P-mean recoverable contingent resources in one of the structures that's already had a couple of discovery wells drilled in it, and we've got quite a lot of additional prospective resources on that same structure. But there's a lot more prospective resources on the block, and you have to start somewhere. And this is a manageable project for a company our size. We're planning for production of order of magnitude 8,000 barrels a day in 2021, if all goes to plan. The estimated chance of success on that from the third party who produced our CPR is 80%. That's because there is reservoir risk, as there is with any reservoir, but this is not an exploration risk. As I said, the 2 discovery wells have already been drilled. So we have a current appraisal well in process, which will cost order of magnitude 15 million or so. That's already part funded because we've already got a lot of long lead items bought, and we've done the well design, well planning, the environmental work, site survey, and so on. We're planning to farm out, and we've got discussions that are now reasonably advanced, and I'll talk a bit about that. And the upside on this is substantial. The potential cash flow from 8,000 barrels a day plus is over $100 million a year. That's before, of course, we farm out, so we'll give a chunk of that away. But assuming we do that, that'll also mean we won't be calling on shareholders to fund the well. So that's basically our main focus at the moment, and it's the most important thing to us because that's how we'll build cash flow and also build a base for further exploration and production, I hope, in Cameroon. We do have some other licenses which I will talk about, 2 quite interesting ones. South Africa, where we have a joint venture with New Age, and the block that we have, which New Age operates, is next door to Total's Brulpada discovery blocks. And we also have some attractive blocks under a license in Namibia, in the Walvis Bay area, and I'll talk to you a little about those. And we also have, as a legacy from some earlier assets that we have some royalty agreements in the SADR, but I'm not going to spend time on that because the SADR, for those who are familiar with it, is not a country yet. So that's what I'm going to talk about, and I'm going to talk mainly about Cameroon and Tali. The Tali block, for anyone who's not familiar with the Gulf of Guinea, is in Cameroon, in the Gulf of Guinea. Cameroon is kind of in the corner between Nigeria and Equatorial Guinea, and Cameroon is an oil producer itself. The production in Cameroon peaked, I would say, at around about 160,000 barrels a day more than a decade ago, but is now something more like half that. So it's a country which has got some interesting projects at the moment. There's a big LNG project, floating LNG, in fact, which is led by Perenco. But with all the attention that's gone on gas, oil's been a bit neglected. The important thing about this is simply that there is a lot of infrastructure already in place in Cameroon, and it's a very well-established oil province. And I think that the interest level in the country is for supporting more oil production is very high. The government's very keen to see the decline in oil production reversed, and I think quite rightly so. And so that's meant that the government have been very supportive towards us, which we've certainly appreciated. It also means that to the extent we want to use existing infrastructure to move oil out, there's plenty of it there. You can see on this picture where our block is compared to the various Perenco and Adax oil fields and the Mosongo terminal, which is a joint venture between the various producers and the state oil company. And if we choose to move our oil out through the Mosongo terminal, we can do it, and we would join that consortium to do it. The pipeline network is quite extensive, as you see, but in the near term, this is not a long distance. As you can probably see from the scale of the chart, we're talking just sort of a few tens of kilometers to move over to the Mosongo terminal here. And we'll be planning to produce into a shuttle tanker, which can do that without our having to immediately rush off to build a pipeline connection. But in the long term, as you can see, there's no shortage of infrastructure, no shortage of ullage. And it is an area that is well known as a source of crude oil to the traders and so forth, and they have cargoes collecting oil at Mosongo all the time. So we're in a well-established zone. The block that we took over, which was originally, I think Shell had it long before Total, and then Total included it in a package of assets that they sold off to Perenco. The block has a number of interesting structures on it. The one that we're focusing on at the moment is this Njonji structure, which is an oil-bearing structure where Total drilled 2 wells, Njonji 1 and Njonji 2. And when they drilled the second well, they discovered that there was a fault here, which separated this node of the structure from the rest. But there's also a lot of other prospectivity because the Disoni field was originally part of this block, and Total had also made discoveries here. And when Perenco took over the asset, what they did is they took the Disoni block. They didn't have a lot of time to decide because by the time they acquired the asset from Total, they were already at the very end of the exploration period for that license. So they had to make an immediate decision what to do. They decided to put Disoni into production, which they did, and it's a 25 million, 30 million barrel field. It produces, I think it was around 12,000 barrels a day, and it's been a very nice little earner for them. As far as we can see, there's some substantial potential fault blocks which are potential extensions of Disoni that extend south into our block, but they haven't actually been drilled yet, so we're not sure what's there. The one well that was drilled was this early shallow gas well, which unfortunately didn't go deep enough to test the oil reservoirs, but we also know there's quite a lot of gas in various places around the block, and actually what we're trying to do at the moment is avoid the gas because there's a surplus of gas in the area. Down the road, there's a New Age project. In fact, if I go back here and we look more broadly at what's going on in the area. There's a New Age project to develop a 1 TCF gas reservoir with some condensate not too far away. And that level of gas volume is a nice volume to develop, but a bit on the low side. And whatever they do, when they put their hub together, we expect that they'll have excess demand for gas, and then we may be more interested in the potential gas resources on this block. But for now, we're just focused on oil, and what we have here is oil. There's a small gas cap here, there may be a small gas cap here, but the seismic, there's usually bright spots where the gas is, and we don't have bright spots, and the wells indicated, in particular on Njonji 1, no gas cap at all. So we're aiming to simply produce the oil, and doing so will be fairly simple in this area. The best volumetric estimate we've got at the moment is 18 million barrels in this structure, in the upper reservoir mainly, and in the northern part of a lower reservoir. The lower reservoir doesn't, it extends all the way out even further. It's quite large to the south, but there's a fault across here which is not sealing at the upper level, but seals at the lower level, we think. And therefore, we don't know for sure if this part is oil-bearing or not. And we won't find out from this first well we're drilling, but we will find out from the next one. And if so, that would pretty much double the amount of oil in the structure. Now, what we're planning to do is the original wells that Total drilled, as I mentioned, were in these sort of northern sections. And what we plan to do is to drill our next well closer to the center of the structure, not completely at the center, because there's various microfaults we want to avoid, and we also want to avoid any gas cap if there is one. But we're going to go into a thicker area, both to confirm what the seismic appears to be telling us, but above all, we want to do a flow test, because Total, when they drilled their first two wells, they never did a flow test. So they logged them while drilling, and there's some samples from the well, which is why we know that the quality of the oil is higher quality than the typical Cole and Locale qualities. But we don't know how the reservoirs will flow, and these reservoirs are not the same reservoirs as in Dasoni in the north. So it's important to us to do that flow test, and we can't book proven reserves, even though the discoveries are made and we know the reservoirs are there, until we have that flow test and we can see clearly that the oil moves. Now, there's always a possibility that there's something wrong and we won't have a good flow test. If the well doesn't flow, it'll be very unusual in the Rio del Rey. But there is a risk, and we know there's a risk, and that's why it's so important to drill this well, and why also we can't book proven reserves until we've done so. When we've done that, our thinking is to drill 3 more wells from the same location, but extending in different directions. This well, which we would then plug and return to complete when we drill the other 3 wells, would be both an appraisal well and a producer. The other producers, this one would be vertical, the other ones would go deviated towards the north east, towards the north into the other fault block here, and towards the south. And by doing that, we would be able to draw oil from all the other parts of the upper reservoir, and also we'll be able to test the lower reservoir in the south, so we'll find out whether that's oil bearing as well. And if so, with that second well that deviates to the south, we'll be able to immediately, I hope, add additional proven reserves. The idea then is that the 4 wells all will be extending out to different parts of the reservoir without our needing any additional subsurface investment, but they'll all be coming up together to 4 conductors that will brace together with a simple steel structure, and that will allow us to have the 4 wellheads for the 4 wells all in the same place and above the surface, which will make it easy to bring a mobile oil production unit along next to that structure to produce. And the idea is that we'll then produce with the MOPU into a shuttle tanker, and then that shuttle tanker, if we go back to the earlier chart, that shuttle tanker can then take the oil over to the Masongo terminal, or indeed, frankly, we could deliver it directly to customers' tankers if they prefer. But the idea is to avoid having to do any pipelines, do anything that'll take a lot of time or involve substantial additional mob-demob for specialized vessels. And by doing this, we should be able to get into production rapidly. One of the neat things about Cameroon is that you can get temporary production authorization for up to 2 years without having to file a full field development plan and without having to hive off the producing part of the license into a separate production license. That's very important for 2 reasons. The first is it's simple, and that means you can get to where you want to get to more quickly than if you had to go through the whole process of a field development plan. The second reason it's important is because the cost recovery pool from that temporary production is not ring-fenced. It goes together with your other exploration expenditures. And that means that we can continue to explore on other parts of the license while producing from Njonji. And not only can we get on with doing that all quite quickly and in parallel, but also it means that our recovery, our costs of exploration while we're doing that extended well test on the temporary production authorization, it's recoverable from the Njonji production. And with 8,000 barrels a day or more of production, you recover a lot of cost very quickly. So the plan is to drill Njonji 3 probably in the latter part. It will spud in the second quarter of this year, and we hope to complete it early in the 3rd quarter. And then we'll spend a few months doing 2 processes in parallel. One is getting all the requisite authorizations for the MOPU, and the other is specifying, mobilizing, and installing the MOPU. They're naturally processes that occur in parallel, because until you've got the well result, you don't want to commit to the MOPU, nor do you want to finalize the specification of it, and you can't get the last authorizations for the equipment import until you have a clear description of the equipment that you're planning to import. So these things happen together. In theory, it can take as little as 6 months. In practice, we're assuming rather more. And we expect to get to first oil, hopefully in the 2nd quarter of 2021. And then we'll both begin production, but we'll also be doing additional drilling, because we'll be, first of all, drilling the additional 3 wells that we plan to put into production. But then, assuming everything's going to plan, we would also do some more exploration drilling on those other interesting fault blocks to the north, the cost of which we can also recover from the production. So that's the plan. Now, in terms of cash flow, I thought about updating our cash flow forecast, but I decided not to, because the basic assumptions haven't changed very much since the reserve report that Oilfield International produced for us in 2018. What's changed is the schedule. And so I've explained the difference in the schedule, and basically everything's been shunted out a year, maybe even a little more, but everything's been shunted to the right. But the basic numbers haven't changed that much. The forward prices that were in place then are not that different from now. The market is slightly lower in the prompt than the Ford today, whereas 18 months ago it was higher in the prompt than the Ford. But the Ford prices then and now were a little under $60 a barrel. It hasn't actually changed that much since the time these forecasts were prepared, and neither have the costs changed very much. So I think the best thing to do, because we're updating these numbers right now, is not to present our own numbers, but to stick with the numbers that have already been shown, but simply to point out to you that this is really 2020. We're not going to get this full production in 2021, and this would be more like 2022. And the picture that we had then, which was a total capital cost of $78 million or so, it's not very different now. Tim Lines, when he did that number, had assumed a well cost of about 18 million, which is a little higher than the AFE we had, but he was making allowance for contingencies. And I still think that I'm fairly confident the well cost will come in between the 15 million that we originally estimated and the 18 that Tim's got in there with his contingencies. And the same goes for the rest of the development, which would be $50 to $60 million for the 3 more wells, which will be cheaper than the first well because you don't need to test them and so forth, and for the steel structure and for the pre-operating expenses and so on. So that's our likely outflow. And then we're expecting 100 million a year or so coming in cash flow from that, pre-farm out, of course. We farm out, we'll only get maybe a little more than half of that. But on the other hand, if we farm out, I expect that we won't have to put up very much of this money. Now, to be clear, I'm not expecting a farm out to pay for $78 million. But the thing is that what we've got to pay for at this point is the appraisal well. And the appraisal well, we've already paid for part of it. I mean, we've put at least 3 million of the cost into it already. We're looking for 15 million for that well, and I think it's quite realistic to get that from a farm out, and we're in fairly advanced discussions about that at the moment. Once that's done, and bearing in mind that we've already put $10 million in before we even look at the well, provided we get the proven reserves we expect, we should be able to get reserve-based lending to cover the bulk of the rest of the phase 1 development, $50–60 million, not unrealistic to get, provided we've already got that 25, maybe 30 million of equity underneath. So therefore, the key thing for us in terms of equity financing is this appraisal well. It's the last of the risk money. And my view has been we've financed part of this from shareholders, but I really want to try to not take it all from shareholders. And we've had a process going for some months to bring in partners instead to farm in. Now, doing that's been interrupted as a process because we had to get our license extension finalized, and that effectively meant that we had to put some discussions on hold for 2 or 3 months until we had even though we'd been told we'd be given the extension, we were waiting for the document, and the document only arrived in January. Since then, those farm out discussions have picked up pace, and I'm now very confident that we'll get that done in the not too distant future, which is why we're planning now already for the well spud and getting back to brass tacks. We've done the site survey already, and that's the next step that takes us to finalizing the rig. So anyway, that's the story on Thali. I won't talk about South Africa or Namibia unless you particularly want to. You ask me questions if you'd like. Nor the team, because most of you know this already. The drilling is being done by Bedrock Phil Church, who's drilled all the New Age wells in Cameroon and is drilling in Gabon at the moment, very experienced West African driller. And our G&G work is done by EPI, we've been working with very closely now for the best part of 7 years. So that's it. Appraisal and development in Cameroon, that's our main focus. And we do some other exploration as well, but that's for the longer term.
Thank you very much indeed, Jeremy. John, some applause. And let's have some questions now. Please wait till you get the mic. Anyone got any questions for Jeremy? Please raise your hand. Okay, well, while you have a think about that, perhaps you've not mentioned the other big properties. I mean, Namibia, I know, is a much higher risk property than Cameroon. But you were talking last year about discussions with a major oil company, which sounded quite exciting. Where are we on that? Are the major oil companies still interested in your South African asset?
Yes, they're still interested, but they are moving very slowly now. They were quite busy on it in the third and fourth quarters of last year, and then they've slowed down markedly. And they've explained that this is because of resource constraints on their side. They expect to pick up the pace later in the year. I think that there's another reason, which is that there's a couple of important wells coming up in the area. And also there's a bunch of multi-client work that's being done up here in the Walvis. And I think they want to see the results of that, both the wells and also that multi-client work. And I don't blame them. That's what we want to do as well. We've got no particular plans to do a great deal of work until we also see what's coming in. The thing about Namibia is there have been different approaches generically to what kind of structures you look at. And you know, the blocks that we have, there's actually a slide a little further on in the appendix, which I'll share with you. If you look at this bottom left-hand corner here, it gives a bit of a sort of top-down picture. For those who like the cross-sections, there's the top right. But basically, in our block area, there's these giant structures, and there was another one called Delta, which we already drilled. That was the one we did with Repsol back in 2014, which superficially looked absolutely fantastic. They were four-way dip closures, and they were massive, and there was a great AVO anomaly over one of them, which coincided so neatly with the structure. It seemed like the most exciting thing. And Repsol agreed, which is why they farmed in, and we drilled that well. Not successful, and the AVO anomaly was completely misleading. At the moment, a lot of people, including us, are paying attention more towards the Graben, and in particular, the structures that are closer to shore. And the idea really is that it's really more of an Albion play, but the idea really is that the oil has probably migrated in this direction because it obviously didn't go at least in that direction. Now, we haven't given up on the big structures, and one of the things that I notice about Exxon's strategy is that they seem more interested still in these deeper areas where the big structures are. But other people, like Shell and like Tullow, have been focusing much more on these areas that are a bit closer to shore, which is also, by the way, where Norsk Hydro's wells on our blocks had the original oil shows. So, and those oil shows do indicate, well, I won't talk too much about the potential sources of those, but suffice to say that it very much supports this idea And that's why we're looking much more closely now at those areas closer to shore. But obviously, the more information that we have from the wells that are being drilled at the moment, the better we can decide where to focus.
Jeremy, before you finish, the other thing we must discuss is cash. I mean, when you look at your assets, at first glance, all looks very attractive, and then you look at the market cap of the company, and it's something like £5 million. And the only explanation for that, I think, is that Tower needs more money to get done what it wants to get done. And that's clearly worrying markets, worrying investors. We're waiting for this deal, get a farm in Cameroon or something in Namibia. What can you do to reassure markets and investors that you will get the money and you will be able to take things forward?
Well, yeah, our market cap's around £6 million at the moment. And that's obviously completely determined by investor uncertainty about how we're going to finance this appraisal well. My own belief is that we can do the farm out. Otherwise, we wouldn't be doing the things we're doing. We've done the site survey, which is quite expensive. Last year, rather than tap shareholders for money, I put in myself a $750,000 debt facility as a bridging facility to minimize at the time the amount that we had to raise from the market. We also did a fundraising which I cornerstoned myself. So I obviously believe that we can get this done. But on the other hand, you know, one has to be realistic about how one goes about doing things. And, you know, doing a strategic deal, okay, $15 million, it's not exactly like Premier Oil or something, but for the kind of companies who would be interested in working with us on a project like this, it's a significant amount of money. And everybody's got, or at least the last year, had the same problems raising money from the market that we had. So you had to work with people who either had money from other sources for their own reasons, or had production or something like that, but then they themselves would be waiting for cash from production, waiting for cash to come from the sale of another asset. So you can't simply say, well, this is my timing, and you've got to sort of do things according to my timetable. The art of doing a strategic deal, and I've done plenty of them, I'm a bit grey in the hair myself, is that you've got to be ready to work with other people and work with their timing. But one of the key problems that we had was that not only did we have to work with other people's timing, we also had to deal with the license extension and the usual slowness in Cameroon in getting what was agreed actually reduced to paper. So that took a chunk of time out. Since we got that document in January, the pace has really picked up on those discussions, and also the market generally feels better. And even though we're not planning to go to the market to raise this $15 million, it does affect the climate in which other people can make investments. So altogether, I'm quite confident we'll get it done. I'm quite confident that we'll meet that schedule to get the well underway by the end of the second quarter. You know, if I didn't think that, we wouldn't be talking in the way that we are.
Got a question at the back.
We asked the chat boards on the website earlier if they had any questions for you. Sure. The TRP chat board's quite active on the site. I think you may have covered them, actually. There was 3 questions. Somebody asked actually about the equity raise, which you obviously just spoken about, whether you... they asked, it was a chap called Big Bear 2, please ask of equity raise expected as part of the finance for drill. I think you've just covered that effectively.
I mean, I don't rule out doing some equity. If it depends entirely on, there's several people we're talking with, and some people want to do the whole thing if they go ahead, and some people want to do part. And we could parcel it out to a couple of different people part and part. Another option, if somebody wants to do most of it, given the fact that we've already put a bunch of the money in anyway, is that we could always do a farm out deal and then top it up from the market. But I'm certainly not planning to go to the market for the whole 15 million. Another thing to bear in mind is that, you know, we might always come to the market for a little bit of working capital. But again, I don't really want to do that until it's quite clear that we're getting the bulk of the money from somewhere else.
There was a couple of other questions, and again, I think you've covered Oil Man Mike, who said he's got a significant holding in the firm, asked about the Cameroon farm out and the drill schedule. I think, again, you've covered that.
Yes, exactly. And we'll be clarifying it further. I mean, the schedule in this presentation I've just given you, we'll be putting it onto the website in the morning.
Fabulous. Thank you for that.
Last chance for a question for Jeremy? No? Well, that's very interesting. Thank you very much, Jeremy. Really interesting stuff. Let's give him a round of applause.